Hello and welcome to the Great Retirement Reset here presented by Priority Gold. I know we have a lot of people filing in for this live event and you know, over the next 30 seconds, 45 seconds, we'll let people continue to come in. As people do that, you know, want to be able to just thank you for joining us and honestly congratulate you on investing in yourself. You know, being able to take some time out of your day here to be able to learn about what's going on in the markets, how things are shifting, how gold and silver are playing a very incremental role in our economy and around the world. We're going to be diving into a lot of things here today. So yeah, I see more people continuing to come in. So, you know, if you can join for 5 minutes or 15 minutes, or we'll probably go for about 20 to 25 minutes here, just going through a number of different topics, a number of questions that people have asked us. And again, a lot of major market updates that's happening around the world.
Of course, and it's a pleasure to be here for the both of us. But I will say, we're not going to get to every question. So if you have questions, please post them. And if we need to, we can always talk to you one-on-one after. So
absolutely. You're actually going to see here coming on your screen some information for myself as well as my colleague Morgan Steckler. My name is Michael Klaus. I'm one of the senior account executives here with Priority Gold. I've been doing this for a better part of a decade and helping run our retirement division, and my colleague Morgan.
It's nice to meet you, Morgan Steckler. I've been here about 20 years. I've been doing this about 25 years. More of a macroeconomic background, which is probably pretty key these days to go over data points and why you're here to go over everything that we need to in understanding the protection of what gold represents.
Absolutely, both for what's going on now as well as what's going to be going on over the next couple of months. And you're actually going to be able to see our contact information there. If you guys have any questions, you know, reach out to us. Our direct phone numbers are on there. You're going to see our emails on there as well. Obviously, you know, we want to be able to spend some time one-on-one if you have specific questions, and we cater to each of our clients individually. So feel free to reach out. We're always available to answer questions, go over what we're seeing in the markets, and be able to help you out. And then just some information on Priority Gold as well. This is not new for us as a company. We've been doing this for almost 25 years, which is crazy.
No, especially when you see, especially when you see other companies kind of pop up. The key is you always look at companies that have been around. We've seen the ups and downs. We've been through different cycles within this world, and where we are now is very different than previous occurrences. So being and working with people who have been through this is probably pretty key, so we can guide you through the long term, because that's what this is all about.
Of course, we've been through market ups and downs. I mean, been through what happened in 2008, been through what happened in the last 2 decades. And again, look at our ratings there on the screen. We are the #1 rated company from Forbes magazine, Fortune magazine, Financial Services Review. We are Inc. 5000's #1 gold IRA company. Thousands of reviews across Better Business Bureau, Business Consumer Alliance, TrustLink, Google, endorsed by, if you guys know who Robert Kiyosaki is, the famed author of Rich Dad, Poor Dad, famed economist. He has partnered with Priority Gold. He really wanted to partner with a precious metals firm. So yeah, working with a company that has that establishment.
And don't forget, you know, we also have a partnership with the Texas Rangers in Major League Baseball, which took many years. Since our corporate headquarters is in Dallas, it's amazing to be a part of that as well. So it shows, you know, what establishes us as a company.
We're one of the largest and oldest precious metals firms in the country. So working with, you know, an organization that has been through this, that knows what they're doing, and it can help guide you through the incoming storm is, you know, we literally titled this the Great Retirement Reset, because we're seeing things that can be a reset of currency, a reset of economies, and we'll go over a lot of that. The reason why a lot of you are probably tuning in is because you're hearing a lot about gold. I mean, when we're talking to people on the phone, Morgan and myself, we're hearing from people all the time of, I heard this from my friend or my neighbor or my brother, and what is gold? Why is this working? How is this working? And we're seeing so many headlines out there.
Well, the headlines are pretty key, because the world has definitely shifted, and we'll go through that. But over the last number of years, people are now looking more into a haven, a stability. That's why companies like JP Morgan and Goldman Sachs and Schwab, they're now also, and hedge funds are all starting to put a percentage into a stability like gold and silver, which we'll go into because of the worries of our dollar, worries of recession, worries of the markets. And that's why you're seeing what Bank of America, what, you know, even Morgan Stanley's talking about. You're seeing the ratios change to what we haven't seen really in a very long time.
Correct. The headlines that you're seeing on your screen, Bank of America forecasting gold to go to $5,000 an ounce next year. JP Morgan saying that they see gold doubling in the next 3 years in 2028. And you're seeing, again, Morgan Stanley basically getting rid of the old playbook of what you should have in stocks and bonds and saying you need to have gold in your portfolio.
Or even hedge fund people like Ray Dalio, who
Exactly.
is now saying 20-25% to be in gold, or even what Jamie Dimon said recently, where he even believes gold could be 8,000 to 10,000 over the next
Absolutely.
number of years. Why are they saying that? What are they doing and saying, versus what they did not say a number of years ago?
And probably what they have been doing and now are advising their clients to do. So that's what we can help you with, and that's what we'll kind of go through here. But again, as we go through this is not to say anybody is late to the party of getting into gold. We have been helping clients, and our clients are in a very, very strong position. Clients who we've been helping for the last 3 years, 5 years, 10 years, who call us every day and say, I am so glad that I did this 3 years ago, 5 years ago, a year ago, 10 years ago, because I'm more positioned. I'm seeing all of this, and everything that you told me 10 years ago is now coming to fruition.
It's just playing out quicker and quicker because
Exactly.
this world is changing. I mean, you're seeing in headlines, is my money safe? You're seeing these data breaches. You're seeing, a lot of these worries of these ones and zeros that are shifting. So you're seeing, what is my bank safe? Are my funds safe? What's happening in this, technical war of data and currency?
Of course.
It's affecting us. I mean, heck, even those Amazon blackouts that have occurred, which shuts down life. We're so dependent on technology. That goes back to the same transitive reason why gold and silver, something that physically supports you and stabilizes you, is key.
Yeah, and is more secure. And again, the questions that we're hearing from clients, like you said, is my money safe at the bank? We see there on the slide, why is everybody buying gold? We see gold smashing records as the dollar wavers, prompting precious metals miners to come off the sidelines. A lot of things that we talk about with clients is the third thing about retirement accounts. Should I move my 401k before the next drop? I have retirement funds, IRA, 401k, 403b. What should I be doing with that? If it's exposed to the risks of the market, how can I protect that?
And we'll go through that, but obviously, we don't want to become casualties to whatever this reset will be. So if you have a nest egg, and whether it's for you or the people you love, your children, your grandchildren, your whole idea of a nest egg is for it to be there, for your coffer to be there. You don't want to open it up and find mothballs due to what's happening.
Absolutely.
You want to have it in what is assuredly safe.
Absolutely. And again, I know more people are continuing to come in. We'll start and talk about a couple of things. We're going to talk about really the foundational element of gold versus the dollar. We'll talk about what we're seeing in the markets. And again, we're here to be able to help. This is the beginning. For anybody, as you have questions, reach out to us. Go to prioritygold.com. We're here to be able to help. I know this is very much just a visual of you seeing us talking about this, but we really do take a hands-on approach for all of our clients to be able to have that one-on-one where we want to hear what your goals are, what your concerns are, how gold and silver can help with that. So continue, if you ever have questions, you can reach out to us directly. I think we can put our contact information back on the screen at some point there.
Of course, and it's all
we're always happy to be able to take those questions.
And it's all one-on-one. You can talk to Michael or myself directly or anyone else here at the company, but our goal is to customize and help you one-on-one, because what you want is different than what our last client or our next client's going to want or what we want. It's for you. This is all about you, and it's helping you figure out the best methods for you to feel safe through this, tumultuous time.
Yeah, of course. It's the uncertainty, which, uncertainty is uneasy for a lot of people because you want to be able to know the answer. And certainly having questions, it's never a great feeling. Kind of going to the foundational element that I think we talk with a lot of clients about and a lot of people are looking at now is just looking at the dollar's decline. And the biggest thing when you look at gold, and I tell people this all the time, gold is just another currency. When you look at gold, you have many different currencies around the world. You have the dollar, you have the pound, you have the yen. Gold is similar in that essence. It's the world's oldest currency. And so why we're seeing a lot more of gold now is because what you're seeing is the dollar's decline. The global confidence in the dollar is fading. You're seeing nations diversify those dollar reserves into gold and silver. Inflation, the headlines that you see on your screen, the dollar divorce, Asia's shift away from the US dollar is picking up pace.
And more importantly, central banks too. Look at what people are doing, institutions are doing, not what they're saying. You're seeing central banks buying more gold. You're seeing BRICS nations, which we'll talk about, buying more gold and silver than ever before because they are looking for a safety measure themselves. That's why metric tons are being bought by family offices, by central banks, by institutions to protect their wealth for themselves and for their clients. But same thing. Why? It's all because of our dollar decline, and we'll go through a lot of that. It's because, unfortunately, of this hyperinflation that we've now entered. You know, whether we choose to accept that or not, it's where we are.
Correct. Money Magazine and Financial Times have said that we are at about 10 to 15% annually is what we're losing in the dollar. This year, we've already lost well over 10%, and that's buying power. I mean, picture if you have $1 million, $100,000 or $150,000 of that in the buying power. You still have the same amount of money, but it buys that much less. And you multiply that by a year, 3 years, 5 years, as we look forward where this is going. This is why, you know, central banks are making the moves that they are, getting away from the dollar. And you mentioned even the cracks in the system there with the banks. What are you going to say?
Well, no, it's because of how much we're printing. And as we'll discuss, you know, you can't print as much as we have without things costing more for less.
Correct.
We're losing, as you said, about 1.1% every 30 days, which is about 13.9% annually. We can't live like that knowing that our dollar and the perception thereof around the world is just becoming less and less. People don't believe in it. And once you lose belief in a currency, there's really no coming back from it.
Of course. And you can't just, you know, nothing's free. So when you talk about, oh, free money, everybody knows that's not free, you know, and you just rack up all of this debt where, you know, you see their banks are sitting right now, $400 to $500 billion in losses. We know our debt as a country, our deficit is $38 trillion, which is just almost an unfathomable amount of money. And we're adding, what is it, about $1 trillion every 100 days, Bank of America is saying now?
And also when you think about that with our credit card debt, you know, with 2.3 trillion, you're thinking about just the interest on our debt is what, 1 to 2 trillion?
Well, $1.4 trillion a year, just on interest, just to sustain that debt.
And the number is staggering. It's hard for us to fathom how much a difference between $1 million to $1 billion to $1 trillion is. $1 trillion is so much money that if you take $1 bills and stack it to the moon, you could stack it 4 times over and not even hit $1 trillion. Or you go back to the times of the pyramids, and if you earned $1 million a day from the time of the pyramids to present day, you're still not at $1 trillion. It's insane when you think about, and that's how much we're adding to our debt every 100 days, and the interest on that continues to grow. There's no escape from what's happening, and once you're at this point, you're at the end.
Of course. It's a house of cards. I mean, we're sitting on that house of cards, and so many things are propped up by that. We look at the banks, you look at the, you know, the markets, and Bank of America, Bloomberg saying the most expensive valuation in history, because everything has been propped up by this free money being injected into the system. And at some point, when the hen comes home to roost, you know, you're going to see a bigger collapse there. And so looking at gold versus the dollar and even gold versus the markets, there's some charts that we want to be able to pull up looking at that, looking at gold the past 1 year, the past 5 years, the past 25 years. I mean, this is 1 year looking at what we're seeing with gold's performance versus the market. And we talk to people all the time and say, man, gold's doing very well, or my market's doing very well. My stock portfolio is up 15%. Looking at that, and I'm zooming in on this here, silver year to date, this is from beginning of the year, silver is up 62.8%. Gold is up 50.85%. The S&P 500 is up 17.6%. The Dow Jones is up 12.13%. Those are 12 and 17% used to be good numbers, but with all of the inflation and the money printing, that is barely scratching the surface of breaking even with our dollar.
You're barely breaking even. So also when you're in an interest yielding account, or if in your IRA or any of these vehicles, you know, your CD, it's great. You might be earning 4 or 5%, but that means you're only losing 8 or 9%. So it sounds great, but when you look between the lines, you know, this is one of the reasons why gold is now being talked about more and more. When you sort the top returning assets, you know, cryptocurrency might have been there at one point, but right now you're seeing gold and silver topping the charts because of this. And as supply and demand metrics continue to change as the supply goes down, you know, metals are going to continue to move up because it goes back to the same reason. This is where you can protect yourself.
Correct.
because
And look at the 5-year chart is even more staggering, and then we'll look at 25 years. The 5-year chart on gold than silver is that silver's up 171.9%. Gold right there, 171.5%. The S&P, again, lagging at 108%. The Dow at 63%. And again, these are times when the market has been doing very well, but just because of that foundational, erosion of our dollar and trust of our dollar, it's not just inflationary pressures, it's the devaluation and that lack of trust and strength, that has been forcing gold much, much higher than what people's returns are in the market. And again, over 25 years, this is the staggering one, Morgan, is over 25 years since the beginning of the century in 2000, gold is up 1,352%. We'll show that chart. Silver is up 858%. The S&P 350%, the Dow 300%. So gold 4xing the market in the last 25 years as you've seen this massive shift away from those traditional assets and away from the dollar.
And it's great to look at that 25-year, but I personally look at this, the ways in which we protected and the strategies we had, stocks and bonds and annuities and treasuries, all of these assets are great over, a 5, 10, 20 years ago. But the world has shifted over the last 4 or 5 years. I mean, and we'll go through that, the whole idea of hyperinflation. The rule books, the chessboard has changed upon us, and that's why I always work with clients. We have to adapt and change accordingly because we don't want to become the casualties. We don't want to pay the price for the mistakes that have led us to this unsustainable number, this unsustainable and unfixable problem, with one of the only solutions potentially being just a full macro shift into potentially something like a digital dollar. If that happens, everything that's out of our control is going to be out of our control further.
Correct. And highlighting for everybody, when we look at those charts, the biggest question I think that we get is, well, have I missed the boat? Am I too late to what's going on?
And we're getting questions right now about that. I'm looking at that. So.
Absolutely. And looking at, again, the forecasts that we showed earlier, where Bank of America calling for $5,000 an ounce next year for gold. That's a 25% increase. We're at $4,000 now. JP Morgan, again, the largest financial bank in the world that doesn't sell gold, is saying gold's going to double in the next 3 years. So you haven't missed the boat on any of this. Yes, our clients who came on board, they're so grateful every time we talk to them, and they've been able to navigate a lot of these financial storms. But again, to reiterate that, you have not missed the boat. But I think this is where, and we talked about this at the beginning, the playbook is changing. You're seeing a difference on Wall Street from JP Morgan and Goldman Sachs and Morgan Stanley telling people you need to have gold in your portfolio.
I mean, you have, brokerages like Morgan Stanley are saying that you should have 20%. You look at people and hedge fund billionaires who run billion-dollar funds like Ray Dalio. They are now putting 20-25% into their gold and silver. People are moving their chips off the table. They're moving it into what they know is a stability.
Correct.
Because the strategies they had no longer apply. It's all shifting, so we need to shift accordingly.
It was shocking, I think, for a lot of people, not for us, but in the last 3 to 4 weeks when Morgan Stanley came out with that and said the official recommendation of Morgan Stanley is now not to have 60-40 gold or 60-40 equities to treasuries, which is historically where it's always been, but to say you shouldn't be holding those treasuries. You don't need to be holding those dollars. Get out of that. 20% of that should be in gold. Morgan Stanley doesn't work with physical gold, and they're saying that.
That's the craziest part.
And JP Morgan, their quote is, gold should be the dollars in your portfolio. Getting back to what we were talking about, which is you have an option of what currency you want to back your money. Do you want it in dollars that's going away and losing value and riddled with debt? Or do you want it in gold, which has been historically much more secure, and certainly the growth is there as well?
Especially also as an alternative asset, it's not a 1 and a 0. We live in a digital age. We live in a different world where everything is controlled by someone else. So when you move into an alternative asset, like a real estate, or in this case, precious metals, you could touch, hold, and feel. You can't press a return on a keyboard and move it, and that's a very critical thing. In this digital world, this is a safety from that tsunami that's hitting us.
Absolutely. And talking about treasuries, it really is treasuries out and gold in, as you're seeing countries around the world. And I think on a macro level, I don't think people don't understand how that works, that we need the rest of the world to buy our treasury bonds. That's how we get money. I mean, we don't have enough money as a company. We have to sell treasury bonds. Central banks around the world buy those. It gives us money to be able to pay for things. And that's where that debt comes from. That treasury bond is the debt.
And you were talking earlier even about, before we even came here, about, the last time there was that sale for treasuries.
Of course.
And if there's a sale and no one's buying it, what does that really tell you? Where the country has to buy up their own treasuries.
They're doing treasury bond auctions, and countries aren't coming to the table like they used to. And so when you have a bunch of debt and you have a bunch of costs and you have nobody loaning you money, I use the example that if you have a mortgage on your house and nobody's giving you money to pay your mortgage, what happens? Well, you default.
Yeah.
I mean, at some point, that is the direction, and we've seen that with other countries before us, that you're seeing that shift away from treasuries. Again, countries not just not buying it, they're actively selling our treasuries and our debt. And they're putting those reserves into physical gold and silver. So that confidence in paper assets is really collapsing.
I imagine as the debt increases and that confidence decreases, look what's happening with the housing market, look what's happening with commercial real estate, look what's happening in major cities. I mean, it's getting scarier and scarier. That's why there's a palpable feel to it, and that's why we're getting overwhelmed. That's why we're still seeing people come in. That's the reason why people are looking for where you can feel safe.
Correct. And looking at, again, that monetary shift, going away from the dollar, moving that into gold, moving away from treasuries, moving that into gold. That's what we're seeing internationally. That's what we're seeing here in the U.S. with majorly large institutions and hedge funds. And talking about the largest monetary shift of our lifetimes, that global trade leaving the dollar, central banks getting away from the dollar and treasuries at the fastest pace in 50 years and moving that in the direction of gold and then national banks. But I think this is one of the things that you do so well, Morgan, in talking about that from a macro perspective, and spend kind of 30 seconds talking about what we've seen from different currencies in the past and where it's going to take us from here as history repeats itself.
Well, I mean, when you look at it from a global world leader perspective, when you look over the last 400 or 500 years, you had a Dutch world reserve currency status around the world. It led from Dutch and moved to a British world-led monetary system. That cycle ended and the US dollar became the world reserve currency. And that cycle has now begun to run its course, especially over the last 4 years, where we produced 80% of our money supply versus a 250-year history. Once you go into that is hyperinflation. So because of that, that's what's led to all these cracks. That's what's led to now fast-tracking the end of our cycle. So whatever that new cycle is going to be, whether it's BRICS nations, whether it's a gold-backed currency, whether it's a digital dollar, whatever this cycle is, our time is at the end. Once you lose world reserve currency status, once you go into hyperinflation, in the history of every fiat currency that has ever existed, no currency has ever survived. And that's
fiat currency's success rate?
Zero.
It gets printed into oblivion.
Dinar, Zimbabwe. I mean, you look at all of the different cycles.
Venezuela a couple years ago had it on a micro level.
Wheelbarrows of money to buy because they printed so much to keep their economy going until it collapsed.
Yeah, people take that wheelbarrow full of money to the grocery store and they say, you can take the money, leave the wheelbarrow.
Yeah.
I mean, that's eventually where we get
Pretty
to.
much.
Looking at, again, the next slide, you're going to see it talking about that, the Dutch guilder to the British pound to what we see with the US dollar. We're living that next transition. That really leading into the BRICS nations. That is likely what we're seeing coming up next.
I mean, we fast-tracked it. These last 4 years have led to it. We thought we might have had a little more time, but we're trying to speculate on where that next cycle is going to be. But we do know that's why people are moving into gold and silver. Our time, our demise, we fast-tracked, and there's no fixing our solution in our country because we're printing money to just survive. So now we're just trying to anticipate what the next cycle is going to be. We don't know. We don't have a crystal ball. But we do know that our 401ks, what we have in our bank accounts, what we don't need for today and tomorrow, we worked hard for what we have. We have to do what we can in order to protect it and shielding it, getting, and I'll say it a couple times, getting off, if we're in a storm, you don't want to be in the water. You want to get to shore. You want to hunker down and wait for the storm to pass to reassess. But this is where you could avoid becoming a casualty, and seeing what you worked with and for to go down with that ship.
Yeah, of course.
It just doesn't make sense. No. This is where you want to safeguard it, and to that extent, this is your chance. So
You're parking it in gold, whether that's for a year, for 3 years, for 5 years, for
your
10
kids,
years.
yeah.
It doesn't matter how long you park it there, you're still fully liquid. So you're simply just taking it out of the risk assets and out of those uncertainties of everything that we talk about and moving that into gold. And you're liquid. Your money's there. It's physical and tangible. It cannot be erased with a keyboard. And guess what? If you need it in 6 months or a year, or in 5 years, you want to change that, you can be able to move it out back when we see things getting clearer. I use the example because I grew up in a farming town in central Wisconsin, that what did you do when a storm comes? Well, you batten down the hatches, you bring everything in close, and you protect your assets until the time comes that that storm passes, and then you can move it out. I think for a lot of people, that's what gold is.
And that's especially a point for what we've worked hard. We play by these rules. We build up these retirement accounts. We build up these nest eggs. You know, the banks, and we'll even talk about that. You know, those banks can disappear. They could default. They can go out of business. I've experienced that, which I'll talk about. We're at a point where it's shifting, and we are running out of time in some way, shape, or form. It's not a matter of if, it's when. And when this happens, you want to be safe. You want to be selfish, and you want to look out for yourself, for the people you love.
Yeah, I think you look at the, bring up the next slide, which is the debt spiral, talking about the fact that we're at 38 trillion, and we talked about that. Staggering numbers there, the debt per citizen, the debt per taxpayer. We talked earlier about the banks, $400 to $500 billion, and again, we saw the string of bank failures. Tell your story when you were part of a bank that failed about 2 to 3 years ago.
Yeah, I was with a bank, First Republic. I had banked there for a number of years. I loved it. They were a great service. And I had a lot of my savings in there. I basically saw that the bank was done. I had to go there on a Saturday morning before, I was scared for the FDIC takeover because who knows how long that takes. I had to miss my daughter's gym class. I had to be there in line. It was very nerve-wracking, waiting in an orderly fashion to get my cashier's checks to pull my cash out so it wouldn't be locked up in whatever may or may not have happened. That's just one bank of the, I think, 6 or 8 that had gone down that year. Imagine when you have thousands of other banks that are now all in that same situation. And what happens if that all happens at the same time? What is that going to do? What is that going to feel like? What is that going to do for our country and the people when you're going to have that chaos ensue? And again, this is why you want to be a day early than a day late to a slaughter.
And those banks, not just on a central bank level, you see they're buying 1,000 metric tons that they bought last year. Again, they're moving at the fastest pace in 50 years. You now saw, as of about 4 months ago, I think it was back in July, gold got reclassified as a tier 1 asset, meaning that U.S. banks can now hold gold at the same value that they can hold dollars and treasury bonds, the only other tier 1 assets that are there. So they're doing the same thing. These are the smartest minds in the room, the smartest heads that are writing policy here in the U.S. and globally that are already making this move into gold. And I think really as we move of again, why gold now? And being very much of summarizing everything that we're talking about, which is, again, it's security, it's stability. I tell people all the time, you don't buy gold for what you know, you buy gold for what you don't know. Everything that we're talking about for everyone watching, it's not to scare you. It's not to be able to say, gosh, the world is going to end tomorrow or next week or next year, but it's saying things are shifting. The longer, and I tell people this all the time, you're not sitting on a fence. There is no fence. You have to choose an asset class of where you want your money. Gold is simply history's most time-tested asset. It's stability, as you see there, when markets shake. It's shield for when the dollar slides. It's freedom for when digital systems fail. And just being able to have that protection, and at the end of the day, peace of mind.
Well, don't forget, we were once tied to our dollar. Gold was a form of money for thousands of years, since before the Roman times. The definition of real money, it's fungible, it's exchangeable, it's transferable, it's transportable, and has a store of value in and of itself.
Correct.
That's the definition of money. Our dollar, we had the Federal Reserve Bank Act where they started to, move away from a 1-to-1 ratio, then to Bretton Woods where we left the gold standard. Since we left the gold standard, the dollar's gone down 99+%. It's all based upon our belief in the system. It's all based upon the value. People have lost that perception. People have lost that trust. And when you've gone into a hyperinflation that we have, there's no coming back from it because they're printing more to keep everything looking like
the
it's
long
okay.
term, that long-term debt, we all see $38 trillion. That's current. Long-term debt is estimated to be as high as about $130 trillion with long-term liabilities, Social Security, Medicare, Medicaid, pay increases for government, all of those things. And again, looking at that, again, it's just the easy things that you're seeing on your screen. We see the dollar declining, we see inflation rising, we see debt as a crisis, we see the instability of the banks, and we see a market that is, by all weights and measures, sitting on a house of cards. And, Bank of America, or Bloomberg, I think it was, said we're at the most expensive valuation in the history of the stock market, dating back to before the run-up to the Great Depression. I mean, at some point, history doesn't always repeat itself, but it often rhymes. And now is the time. Now is the time to be able to get your ducks in a row, to be able to seek a safe haven.
Exactly, and that's what looks at the data points. You can't argue with data, and you look at our debt, you look at the trillions, you look at the perception, and it's not what they're saying, it's what they're doing.
Absolutely.
You see the big boys and girls out there, the central banks, big nations, they're making moves to protect themselves. They're buying tons and tons, literally, of gold and silver, and they're reducing their exposure of a dollar, especially as we have lost a reserve currency asset. We got downgraded months before, and we are no longer a world power. We are not a tier 1 world currency anymore, and no one really believes or trusts our dollar. That's why they're hemorrhaging their positions to buy gold and silver. In doing so, they're just increasing that supply, which further creates this issue.
Of course, and as you see on your screen, what happens if we see a market correction? What happens if we see that? How does that impact gold? Look at that, the dot-com crash, which took off 50% of the S&P, gold went up. The Great Recession, 2008, S&P dropped over 50%, gold up 170%. Silver actually beat gold there as well. The 2020, the pandemic panic, markets down, gold up. We're seeing that with inflation. Even when the market is up, gold and silver massively outperforming that, and that's where you see this continuing here as well, of just gold outperforming and giving both defense and offense right now, which is, that just shows how bad that system is.
And I do look at this personally as a defensive strategy.
Of course.
It just happens to have amazing offensive returns right now, but again, we don't have a crystal ball. We don't know where gold is going, but we do know where our dollar is going. We do know where there is an unfixable problem, unless our country makes drastic choices. And if they do, this is why you want to be in something that is not a 1 and a 0. This is where you can control it. This is your nest egg. It's your wealth insurance, just like you have a health insurance in many ways.
And we see a lot of people asking, so now we're getting to the point, because a lot of people are saying, okay, I get it. I know the why gold. What's the how on gold? How do I go about doing this? What is the best way to be able to put gold in my portfolio? What do you guys work with? We work exclusively at Priority Gold with physical, tangible gold and silver. Bars, coins, rounds, but physical metal that cannot be shifted around with a keyboard, not traded on the stock market. You see that kind of volatility. We help clients on retirement accounts. You see gold and silver IRAs. If you have a retirement account, an IRA, a 401k, a 403b, a 457, if it's qualified, we can be able to help you roll that over. It's tax deferred, it's penalty free, and back that with physical, tangible gold and silver, all under the retirement account. So again, no tax implications.
Well, it doesn't leave the retirement account.
Of course.
These are lateral moves, so, and we'll go through the process, but all we do is help you laterally move the funds. It stays under the umbrella of an IRA if you're dealing with a retirement account, and then we help those assets be stored in your IRA. They're allocated, they're in your vault, they're protected, and you can have access to it, whether it's via RMD or closing and taking possession. All of this is in your control, and being in physical gives you the ultimate control.
Absolutely. And on a cash end as well, it's very easy. If you're just sitting in a dollar and you say, well, I don't want to sit in a currency that's going away, it's very easy. It's just the same as a currency conversion. You're converting your dollar over into gold and silver as the currency that backs your money. Again, we do free insured shipping. We ship out about $1 million a day. Coast to coast,
Probably well more
to
now,
be
but
able to have that, whether that's in depositories or in private storage. We can arrange storage. We have guaranteed buybacks, and Priority Gold, again, we are the #1 rated company in the country with that service that we provide.
And not to mention, this is all individual. So you can talk to Michael or myself or any of us here. The whole point is we give you one-on-one service. You're not a number. when you're a part of our family, you are treated as a part of our family. We work to help solve what you want because this is your future, this is what you worked hard for. So we help you in however you need.
And that's the biggest difference, because everybody says, okay, why should I go with Priority Gold? I see gold even now offered at Costco, which is excellent. That just shows how popular this is becoming and how relevant it is. But being able to have someone who can help guide you through that storm. When you talk about that storm, you don't want to be alone in a life raft. You want to be able to be part of a bigger ship that's going to help you guide through that storm. That's the difference between what you get with Priority Gold versus other places, is you get personalized, ongoing guidance. We help our clients navigate through the treacherous waters. You know, clients call us every week, every couple of months, a year, once a year, twice a year. Hey, how's everything going? I saw this. Can you help clarify this for me? And that's what we help our clients with. And that's service that you don't get a lot of other places, where it's like, great, we're going to sell you gold. We're never going to buy it back. We're not going to give you assistance. And you might not be put into the right gold or silver that matches up for your goals.
Also, it's not, it could also become pretty complex depending on your situation. You know, this is not something that you do alone. Between us, our operations, and our IRA departments, we actually have you on the phone. We help do all of the legwork with you from start to finish.
Hold your hand through the process.
Yes, we do all of the paperwork. We assist you every step of the way. So it takes very little time on your end, but we do the legwork, and then we help you have that peace of mind so you don't have that elephant on your shoulders.
Absolutely. And again, looking at that process, and we'll pull up this slide here of what that looks like. The first thing is have a conversation with us. You know, we're going to provide all of our contact information again. Hopefully you wrote that down at the beginning. We can give that to you again. What's your direct line, Morgan?
My direct line is 469-466-5648.
Okay, and that's how you can reach Morgan. We'll put my information up there as well, 469-895-2806. Give us a call, go to prioritygold.com, schedule a free consultation. At that point, we'll kind of understand your individual goals, what that looks like for you, some different strategic options, kind of reviewing that. If it makes sense, we'll help you get started in moving forward. Again, holding your hand through the transfer of funds, whether that's cash or retirement accounts. We'll help you then in going through a full metals consultation. We typically spend an hour with each client going through those consultations so that you get some education. You understand that there's a difference between gold and silver and bars and coins and rounds, and helping guide you of which metals might be best for what you're looking for.
And also if you're trying to just gather information, you know, this is not expecting you to move right then and there. If you want to take time, we're here to talk with you. If you want to have your significant other or someone else on the phone, like, we're here to help you at your pace. This is not like get started right now. If you want to take a little time, that's completely fine. We're here to guide you. This is big decisions. There's a lot happening in this world today. We are here to help you at your pace, and that's the key. Protect yourself, but you know,
inspirational knowledge for anyone is certainly sooner versus later, just because again, we don't know what that future holds. If we had a crystal ball, we know we wouldn't have to be able to come to work, but it's certainly just protection before the storm versus you're getting into that storm or after the storm. The protection does you no good.
100%.
So I think for everybody, you know, watching this, it's reach out to us. Again, we're going to put all of our contact information on the screen. You can go to prioritygold.com. You can be able to schedule that free consultation. We'll understand what your goals are, and we'll answer your questions. Questions are not a bad thing. As we enter into this, you're going to have questions, but reach out to us and we can help you answer that. And let's help you build a portfolio that really fits your goals, that helps you navigate through that storm that's really coming up.
Yeah.
Anything else you want to be able to add?
No, I think you've said it perfectly. You know, the worst question is the one that you never ask. So that's why we're seeing a lot of questions come through. We might not have time to get through all of them, but for the people who do have questions, you can watch this again or call us. Call our toll-free number, call us directly. We're here to help you. Whatever the question is, we want to guide and assist you, and that's the key. I mean, this is the time.
There's one more slide at the very end with that contact information. It says your next step with Priority Gold, has Morgan and I next to each other. Put up that, because again, if you guys have any questions, reach out to us. Go to prioritygold.com. You can reach out to Morgan directly. You can reach out to myself directly. Has our contact information there. Give your phone number again there, Morgan.
It's 469-466-5648. 5648.
And again, you can reach me directly at 469-895-2806. You can see our emails there as well. It actually makes it very easy, and I'm not that technological of a person, but our incredible team behind the scenes put those QR codes. So if you're the type of person that wants to just be able to scan a QR code, it makes it easy to actually add a contact to your phone, makes that very easy for communication. But again, reach out to us. I hope that you guys and girls have enjoyed everything that we've talked about here. Again, this is realistic. This is not trying to be a scare tactic or anything. This is what is happening. This is what is happening behind the scenes and what it has been happening and what is going to continue happening. So now is the time. Protect what you have. Put yourself into a position of security. And again, that peace of mind is, pun intended, worth its weight in gold.
100%. And this is why you want to talk. And one-on-one, we'll go through everything. This is not, in many ways a platform to talk individualized questions, but this is where we're going to help you understand and help you see the light in terms of what you want to protect. You can't argue with data points. You can't argue with what's happening. And you have two choices: to stay where you are and just risk it, or take a percentage or whatever you decide to ensure your financial future in many ways.
Absolutely.
Yeah.
Thank you all for joining us, by the way. And again, I want to congratulate you for investing in yourself, taking the time here. I think we've spent about 35 minutes, 40 minutes here, being able to go through a number of, the topics that we're being asked by clients, what's going on in the markets and where we see gold and silver going from here and how it helps clients protect. So thank you for taking the time. Again, give yourself a pat on the back, because everybody who's tuning in, you're going to be ahead of the people who in a month or 3 months or 6 months from now are saying, man, I need to be able to do something. And you can be like our clients who came on board a year ago, 3 years ago, 10 years ago, who say, I am so glad that I did this. I have this freedom financially and this peace of mind. So congratulations on doing that.
I have to also say, those clients who have worked with us for many years, one of my biggest blessings are those great conversations to tell them how their portfolios are doing.
Amazing.
But even the fact that they always share in many ways, that they refer the people they love to us as well, because they want them to have the same protection.
Same peace.
Once you join our family, you're a part of our family. You can bring your family in here as well. That's the whole point. We're here together. It's on us to help each other in this very scary time that we're in.
Yeah, absolutely. So again, thank you for joining us for Priority Gold's Great Retirement Reset. This is very pertinent information. If you enjoyed this, we are going to make this link available so that way you can watch it again, or you can share it with a neighbor, a family member, a friend. We want to be able to help as many people that we can. It's a joy that we get to be able to do this and having conversations with people on the phone. And again, reach out. If you have questions are not a bad thing. The only bad question, I love that line, the only bad question is the question that you didn't ask. So thank you for joining us here today. If you have any questions, reach out, but otherwise have a blessed rest of your week.
Thank you so much.